You have 10 lakh rupees to invest for the next 10 years. What's the smarter choice? Shiny, glistening gold bars, or a solid plot of land? The answer might not be what you think, and by the end of this video, you'll see a clear winner. Let's break down the numbers. Historically, gold has offered a respectable 11.2% compound annual growth rate over the last 2 decades. That's solid. But land investment, we're talking about returns between 12 to 15% annually, and that's before we even consider rental income. Right away, you can see the potential for land to pull ahead significantly. Now think about how your money works. With land, you get a powerful 2-for-1 deal. As the property's value appreciates over time, you can also be earning a steady stream of rental income. Your investment is actively making you money month after month. Gold, on the other hand, just sits there. Its only potential for profit comes from its price going up. It's a passive asset, waiting for the market to move, while your land is working a double shift. This is where it gets really interesting. Leverage. To buy 10 lakh rupees worth of gold, you need exactly 10 lakh rupees in cash. It's a one-to-one transaction, but with land you can use the power of bank financing. With just a 2 lakh rupee down payment, you can secure a loan and control a property worth 10 lakh rupees. You're using the bank's money to build your wealth, multiplying your investment's potential from day one. Gold offers no such advantage. Let's talk taxes, because keeping more of your profits is crucial. Land investors in India have access to powerful tax benefits. Sections 54, 54EC, and 54F of the Income Tax Act offer significant exemptions on long-term capital gains when you reinvest in property. This means you can save a substantial amount of money that would otherwise go to taxes. For gold, the tax benefits are extremely limited in comparison. It's a clear win for real estate here. Beyond the numbers, there's a fundamental difference. Land is a tangible asset. You can walk on it, see it, and use it. You can build your dream home, start a business, or cultivate a farm. It has real physical substance. Gold is also tangible, but it typically just sits in a secure locker, out of sight and out of mind. It's an asset you store, not one you can truly experience or utilize in your daily life. In times of rising inflation, protecting your wealth is paramount. While gold is often seen as a safe haven that keeps pace with inflation, land often does even better. As the cost of living and construction goes up, the value of well-located land tends to rise even faster, providing a superior hedge against the erosion of your money's purchasing power. This brings us to utility. What can you actually do with these assets? Land is the foundation for almost everything in our society: homes, offices, factories, hospitals, and farms. It has immense practical and economic utility. Gold? Its primary use is for jewelry and as a store of value. It's beautiful, but it doesn't build communities or create infrastructure. Think about the long term, the legacy you want to leave. Land is a generational asset. A well-chosen plot can multiply in value over decades, providing wealth and security for your children and grandchildren. Its value is tied to development, population growth, and scarcity. Gold's value, while it does grow, is far more dependent on market sentiment and global economic factors, making it less predictable over multiple generations. Of course, we have to consider liquidity. Gold is incredibly easy to sell. You can walk into almost any jewelry store and convert it to cash within minutes. Selling land is a more involved process. It can take weeks or months to find the right buyer and close the deal. However, this slower process is often rewarded with significantly higher profits. The patience required for a land transaction often pays off handsomely. So when we put it all together, the verdict is clear. In a head-to-head comparison across returns, income generation, leverage, tax benefits, utility, and long-term growth potential, land comes out on top in 8 out of 10 criteria. For more such investment insights, subscribe to our channel and hit the notification bell so you never miss an update.